Hi, good morning. It's nice to have all of you here. And this is RN Bhaskar from BKBB, an acronym for Bhaskar Ki Business Baatein. This is a channel that comes to you with business stories, occasional conversations, and almost regularly, policy analysis. But right now, at 8:15 in the morning, we bring to you news behind the news. We pick up headlines that we think are very important and discuss them for you. And today, my co anchors are Shivangi, welcome again, Saloni, Janvi, and Hussaina. Welcome, all of you. It's good to have you here. Titles that you will find very interesting. And the titles are uh, the first one, as you can see, it's about OECD's remarks, which predicts a global slowdown and a slight improvement for India's fortunes, but how gold beats every kind of forecast. The second one is on the Indian rupee and how it's fallen to its lowest. The third one is a story on how the courts have hauled up Maharashtra for irregularities in its slum rehabilitation scheme. And the fourth story is about how India plans easing rules for foreign investments. The sooner, the better. And let's take the first story about OECD's remarks. Shivangi, could you come in?
Yes, sir. Organization for Economic Cooperation and Development flags global slowdown. India stands tall, gold gains trust. Well, the Organization for Economic Cooperation and Development, the OECD, has flagged signs of a slowdown in a global economy. Even as it raised its growth outlook for India in contrast to a decelerating world. India is now as seen one of the few bright spots. Meanwhile, gold continues to gain investors' trust as a safe haven asset amid uncertainty. The OECD's latest forecast expects global economic growth to moderate to 3.2% in 2025, followed by a few further easing to 2.9 in 2026. The Paris-based agency cities persistent inflation risk geopolitical tensions and weakening investment as key headwinds, especially in advanced economy. In sharp contrast, India's economy outlook has improved. The OECD has revised India's GDP growth for forecast for fiscal year 2025 to 2026 up from 6.3% to 6.7%, crediting strong domestic consumption, robust government capital expenditure, and continued reform momentum, including improvements in the GST framework and recent corporate tax cuts. Additionally, consumer price inflation in India is projected to ease to 2.9% in the next fiscal year, supported by stable food prices and resilient supply chains. Against the economic backdrop, gold is once again proving to be preferred store of value in India. Gold premiums have surged to their highest levels in nearly 10 months, ahead of the upcoming festival season. Despite elevated bullion prices, retail and institutional demands remain strong, a clear signal that investors are seeking stability in traditional assets. Well, with many global markets facing volatility and interest rate uncertainty, gold's appeal as hedge is strengthening. Central bank across Asia has also continued adding gold to their reserves, reinforcing the metal's roles in diversifying portfolios. While the OECD anticipates a broader global slowdown, India continues to stand out as a fast, resilient, and a fast growing economy, and the trust in traditional financial instruments wavers. Gold remains a timeless constant in investor strategies. Bhaskar sir, what are your view on this?
Shivangi, you touched upon a very, very important point about what OECD says. I
Yes.
agree with OECD when it comes to global slowdown thanks to Trump's tariffs. But it's quite possible the OECD may be wrong about India because India will see a kind of an inflationary pressure which will be phenomenal because of the next story that we're going to discuss. In the meantime, as you can see, the US's share of gold also in the international markets, as the chart shows on your chart on the screen. It shows that US share of gold in the world has been declining because every other country, the central banks especially, are buying gold. And for the first time in the last month, non-bank holdings of gold increased beyond central banks holdings of gold. So everybody likes gold because nobody trusts any currency, especially the dollar. And thank you, Shivangi. And let's take the second story, which is linked to the first story, and that is about the weakening rupee. Saloni, could you come in?
Yes, sir. So the rupee hit an all-time low of 88.75 against the US dollar. Sustained foreign fund outflows and concerns over the steep hike in the US H-1B visa fee weighed it down. Dealers said that the move compounded fragile sentiment even as the trade outlook remained under sustained pressure from higher US tariffs on Indian goods. Foreign investors offloaded equities worth rupees 3,551 crore on Tuesday. Over the past 2 days, the net sell-off amounts to nearly rupees 5,523 crore. Sir, according to exporters, although a weaker rupee would usually aid competitiveness, tariff barriers blunt much of the advantage. The factors that weakened the rupee also weighed on equities. The Sensex shed 57.87 points or 0.07% to close at 82,102.1, while the Nifty 50 slipped 32.85 points or 32.85 points, which is 0.13%. And it actually slipped down to 25,169.5. IT majors and large private banks led declines as forest funds sold off, though auto stocks and state owned lenders provided some support. The rupee is expected to remain weak as the US visa fee hike issue may continue to dampen domestic market sentiments and may result in foreign outflows. However, overall weakness in global crude oil prices may support the domestic currency. Experts say that any intervention by the Reserve Bank of India (RBI) may provide support at lower levels, but analysts expect further depreciation. Sir, the rupee has fallen 3.7% in the current financial year and 3.54% so far in 2025, making it Asia's second worst performing currency after the Indonesian rupee. What's your take on this, sir?
Saloni, it's a dire warning to India that things are not as rosy as the government claims they are. People are selling shares and buying gold because gold will appreciate faster than many scripts in the markets will. Globally, world over, since the attachment is to gold and since the dollar is sliding down, the rupee will has been sliding down even faster, pointing to great weakness in the Indian market, especially when it comes to the balance of trade, because exports are not picking up. India so far refused to look at other markets, which is again something which is wrong. And that means if if the rupee becomes weaker, expect inflation to rear its head once again. So all the talk about inflationary pressures being dampened down, may not actually happen. You'll see inflation rising, though the government may try to conceal it statistically. Thanks, Saloni. Very important story. And that takes me to the third story. And the third story is about the courts hauling up Maharashtra. Janvi, could you come in?
So today we have somewhat of a local story, but it suggests a huge problem in India's urban housing policy. So the Bombay High Court has come down hard on the Slum Rehabilitation Authority, the SRA, over large-scale fraud in rehabilitation flats. In the Sion Kolewada project, the court found that nearly half the rooms meant for slum dwellers were illegally sold or transferred. So out of the 804 allotted flats, at least 410 had already been sold off, despite clear rules that forbid such transfers. So, calling this highly unconscionable and shocking, the judges questioned whether the SRA has any control left over the very schemes that it is mandated to regulate. And the court has now ordered SRA CEO to conduct a detailed probe to identify illegal occupants and evict them if necessary, so that these rightful beneficiaries could get their homes back. So this the problem is that it points to the integrity of India's urban housing policy. The slum rehabilitation model is meant to be a social contract, right, where developers get real estate incentives and the displaced slum dwellers get free housing. But when flats are illegally sold this way, both the social objective and the market trust ends up collapsing. So for developers, this controversy raises serious risks like reputational risks, and for policymakers it signals that lax oversight could derail future housing projects and investor confidence. And for financial institutions tied to real estate, such scams create long term uncertainty in valuations and compliance. So the next hearing is on October 1st, and its outcome could shape not just the fate of this project, but also tell us about the credibility of Mumbai's entire slum rehab model. And the High Court has warned that unless the SRA tightens its system, the whole objective of rehabilitation is going to be defeated. So, what do you say about that, sir?
Yes, it's a very serious problem. Thanks, Janavi. You have a situation where the government of Maharashtra is kowtowing to the real estate lobby. Policies for the state are being made only after the real estate lobby clears them. And that is not very good. But why blame the state government? Look at the central government. At a time when it should be building millions of houses, it builds only 500 houses, 1,000 houses, and has a lottery to allocate those houses. You are actually stoking speculation in the real estate sector, which is a fundamental right. The right to residence is fundamental. And Maharashtra's using that for making money, first by changing demographics, then by making sure that its favorites are allowed to sell the flats and make money once and twice and thrice over. Sad. Thanks, Janvi. And we come to the next, to the last story. And the last story is one where we're talking about how India finally decides to ease rules for foreign investments. Come in, Hosseina, please.
Yes, sir. So, at a time when geopolitical uncertainty is driving capital away from emerging markets, India is making a bold move. It, RBI and SEBI are now in advanced talks to ease entry norms for foreign investors, which signals a strategic recalibration. So now India wants to be seen not just as a growing market or a place of market consumption, but as a globally compliant, investor friendly regime. And this moves, as we all know, comes as India faces a double squeeze. First is, of course, rising US tariffs and unpredictable trade dynamics are shaking market confidence. And second is a $10 billion capital exit from Indian equities and bonds. In fact, in 2025 alone, surge reflects how global investors are pivoting towards safer geographies. And in this context, simplifying Know Your Customer, which is KYC norms, and aligning RBI standards with SEBI's liberal documentation policies, it's not just economic housekeeping, it's a geopolitical signal. It shows that India wants capital and it is willing to compete for it. Fewer and standardized documents for foreign investors already regulated in developed markets. Registrations time cut from 90 to 30 to 60 days. RBI may also allow foreign investors to open Indian bank accounts based on SEBI regulations. And SEBI might enable direct digital submissions for foreign entities, and it has also launched an app or a website for this very similar purpose. So, this reflects a deeper shift. India is trying to harmonize financial regulation across institutions. It is breaking silos between its central bank and market regulators, something which global investors have been demanding for a long time. And of course, the implications are significant. First of all, India is placing itself in direct regulatory competition with jurisdictions like Singapore, Dubai, and Luxembourg, all vying to be global financial hubs. But It's not just about inflows, it's also about credibility. If SEBI and RBI can jointly lower frictions without compromising oversight, I think, sir, it sets a precedent for a more integrated and transparent Indian financial architecture. At stake is more than ease of business. It's about whether India can truly project financial stability and predictability in an era of a fractured global trust. Anyway, I think, sir, it's better streamlined than sidelined, and it's a step we all were looking forward to. So, what do you think, sir?
Yes, we have a situation where need foreign investments quickly because only foreign investments will create jobs. Already, the government has announced that it will increase its own capex because private investment into capital formation is declining. If private investment declines, government expenditure goes up in capex, it will not create the kind of jobs that we need. You need private investments to come in, which means you have to be more business friendly for domestic investors and business friendly for foreign investors too. Unless you do both, India is in big trouble because if it does not create jobs, it will affect your purchasing power. If we don't create jobs, it will create a political upheaval and will not increase the wealth of India. And that is a frightening situation. Thanks, Hussaina. Good story. And I know that we have we have crossed the time limit that we set for ourselves. But let me take the first question. Possibly I'll take only one question. The question is about the free fall of the Indian rupee. Do you see any trends? Yes, I see a trend. I see a trend of India's weakness. When India's currency starts falling faster than a falling dollar, it means India is terribly weak. We know the US is weak. We know the US is faltering, and we're faltering even more than the US. It means that you need to change your economic policies. It means you have to become more business friendly. It means you have to become more investment friendly. It means you have to stop playing ideological games and consider economic planning. And that is missing. Just reducing GST is not enough. You have to increase it, you have to increase purchasing power. Anyway, that gets me to the end of today's session. Just a reminder, please click the subscribe button, click the like button, and most important, please tell your friends about us.